There we go. Good morning, everybody, and welcome to Option Pit. This is the morning volatility report with Andrew Giovinazzi filling in for Mark Sebastian. We have events, articles, the best course for diagonal and calendar trading you can take. Okay. Well, it's just going to say one thing. This is a more advanced option course. We'll talk about portfolio margin, ways to use diagonals in high vol and low vol. We're going to do a lot of trade simulation, look at some calendars we've had in the past, some diagonals. Also helpful for index trading an index, especially when vol is high and VIX is doing crazy things like we've just had recently. So for all of you that want to add another gear to your education, stop on in April 2nd at 9:30. It's a Saturday morning, 9:30 Eastern time. All right. If you are an Option Pit Live subscriber, you get it for free. If you're Option Pit Gold or above, you get it for free. Also, too, if you take our course and you want to sign up for any of our other services, we will give you the discount that you paid for the course. Okay? Have any questions about this? Just ask me, Andrew at optionpit.com. Your home for options, education, and trading. And with that, we go to the markets. What do we have today? SPY, not much. Basically, I think the story is this. For whatever reason, we have the Fed and the ECB have negotiated a happy, well, at least for right now, a happy or blissful soft landing for the month for 2016 right now. Okay, here we are. We're kind of back into the mid-December area. New highs for the year. Yesterday we're down slightly today. And what is that giving us? Okay, this is what I think. I think you're looking for areas that the market has not really bought back yet. So what are we seeing? We're seeing like a little squeeze in, let's say, FCX. Okay, not very long ago that stock was $4, below $4. Squeezed right back into life with $40 oil and a little bit. Commodities haven't done much yet, but they're starting to bounce. Gold's still strong, but a lot of these little junk commodity stocks are coming to life. A lot of the junky gold miners coming to life. So I think where you want to look right now is, I don't know so much about the market leaders like the Googles and the Facebooks, even Apple, but I think you want to start looking in places that the market has forgotten in our rally. Like, okay, so we're at these levels. We're kind of back to mid-December, but what's not back to mid-December? Okay, so if you take an example like Bank of America, these mid-December levels, this was a much higher stock. Okay, much higher stock back then. The Fed is going to raise, just not as many raises as we thought, but the rest of the market is starting to get back here, but the financials have not. They got a long way to go. So keep an eye on that as an area. JP Morgan buying back a bunch of stock, right? JP Morgan is actually starting to lift, getting, right, not even back to those December levels in the mid-60s. So while big parts of the market are moving back in that direction, I think you want to look at the stuff that, if you want to catch some upside gas, that's maybe where the excitement is. So squeezing commodities and some of the banks looking better. And we'll go through in our chat today. We'll try to look at, again, we try to finance, get the cheapest upside we can possibly find on a risk-reward basis. And I think that's where you want to go. Keep looking at all the junky commodity stocks that are hard to borrow that are getting squeezed. I think that's where the action is. We also, Mark yesterday bought some UVXY puts that are expiring today. Those are doing very well. Volatility overall, I'll say this, we have extreme contango. I'm looking at, this one's going to be delayed, but you've got almost $3 of contango, $3.50 at this point. So the volatility products are going to trade very heavy, meaning that even with VIX going up, they're going to have a hard time going up at this point. We really need a market shock send volatility higher, to send the volatility products higher. So again, if you're a subscriber to Option Pit, we have some strategies, some trades that we came up with yesterday. Stuff like XIV, probably going to do pretty well here. If this continues into earnings, you can see something like XIV up another couple of bucks. You can see VXX easily down a couple of bucks. So things like names SVXY, some of the long, the shortfall products, they're going to do well. And I think that's what we got until there's a reason for it not to be like that anymore. And with that, I will see all of you in our Friday edition of our chat room shortly.